Good morning, everyone. I'm Tara Gillam, Services Innovation Manager at Business West, and welcome to our autumn webinar and thought leadership series, Innovate 2021, Overcoming Challenges and Building for Growth, supported by Business West and Innovate UK. This series of webinars has been running every Tuesday morning throughout the autumn, covering topics from IP, design thinking, funding and finance, leadership strategy and sales and marketing, as well as promoting the wider bespoke support available from us and how we can add value to your future growth plans in this challenging environment. Today is our 11th and penultimate webinar in this series, and we'll be covering innovation funding and business growth finance, and is delivered by our Access to Funding and Finance Manager, Ben Mashida. As a participant of Innovate 2021 and subject to Innovate UK eligibility criteria, there is the opportunity to access our comprehensive range of business support services, which include some access to funding and finance support. I will discuss the next steps and how to access these services at the end of this session. Now, before I hand you over to Ben, there is just a bit of housekeeping I'd like to talk you through. If you have any questions for Ben, do put that into the Q&A tab at the bottom of your screen. That will be moderated throughout. If you'd like to communicate with other attendees, use the chat feature at the bottom. That one's unmoderated. If you have any technical problems or anything at all, raise your hand and one of our hosts will come and support you. For on demand, this webinar is being recorded. Your personal video and microphone will not be used unless invited to speak by the host. So now on to our speaker today. Ben leads a team of highly experienced grant funding, equity investment and debt finance specialists, supporting hundreds of innovative businesses across the Southwest to fund their projects, find solutions to challenging financial requirements and grow their companies in the best way for them. In the past few years, the team has raised over 20 million for some of the most innovative companies in the region. So without further ado, I'll put you into the capable hands of Ben.
Good morning. Thank you, Tara, for that. I'm just bringing up my, oh, there you go. So you can see my screen there now. So yes, thank you for that. As mentioned, I'm Access to Funding and Finance Manager here at Business West. We're going to discuss various aspects of funding and finance available to help innovative companies grow to this morning. If I can, there we go. So quick overview of our team we have here. We have a number of experts in funding, grant writing, finance, equity, debt finance, also sort of financial planning and forecasting. So there's a lot of very experienced members of the team here who have had a number of years doing fantastic impacts. I'll cover off a couple of those later down the slides. But really about today, I just wanted to cover what, some of the sort of key topics, helping you to sort of understand your options when it comes to finance, raising money, fueling your own innovation and growing your company. There's lots of different options and maybe you're thinking which one's right for me. So I'm going to cover off today the key ones being grant funding. You've probably all heard of it, but maybe you haven't accessed it before. Maybe you have and you found it really quite difficult and hard, but we can help with that. Equity or debt finance, and there's other options as well. So I won't read this all out to you now, but we're going to discuss various aspects of innovation grants from 101 level all the way up to quite high level in-depth tips and hints. Quite a lot of different options available in finance, and we sort of separate grants and finance in this and within our team. Finance being things like debt or equity or alternative finance, so sort of money in a traditional sense. But at the end of the day, I just wanted to highlight before we get started that some of the work we've done this year, and in this year, probably the hardest year to raise finance in living memory, we've managed to help hundreds of companies raise way in excess of about £12 million since April. So that's since COVID really hit. Supported 200 jobs creation or securing at a time. And I think that's absolutely fantastic. I think that everyone can really agree that those kind of numbers this year are amazing. So before we get into the nuts and bolts of it, we're going to cover off innovation grants first. I'd just like to get a little poll of the attendees today and just see what your experience of innovation grants are. Have you previously applied for them and were successful? Or maybe you've been unsuccessful in applications. You haven't applied, but you'd like some help. You're thinking about it, or you're just not interested in grants. And that's, they're all understandable. So if you could just fill that in now, I'll give you 20 odd seconds to do that. What we're going to do as well after is, once this is poll's finished, is I'm going to ask you to put some stuff in the chat box as well. So the results of that. So there's a lot of people really kind of looking at grants and wanting to go for it there, 57%. There's one person not interested, I would say, with that 5%. Maybe it's more than one person, but we'll cover off other kind of finance soon. But it's good to see that some people have been successful, others unsuccessful, and most people are just looking to know a bit more by the look of that. So thank you for that. So the next thing I'd like to do is just for those people who have applied and maybe have failed, or even those who have applied and were successful, could you put something in the chat box, maybe a sentence or more, on what's the most difficult aspects you found of grant application writing or the process? Those who haven't applied but would like some help, is there something which is really you're finding quite daunting? I'm just looking for sentences, sort of something quite quick and easy, sort of no details required. And I'll come back to answer specifically or look at those in a couple of slides' time whilst you're getting on and putting those in the chat box. In the meantime, I'm just going to cover off the funding structure of one of the main funders, the national funder, as it's termed, is Innovate UK. They get their money from government, central government, Business, Energy and Industrial Strategy Department through UKRI. So then we get to Innovate UK, which is the main funder. They do a lot of stuff with networks, but only one of the things they do is grants. They do a lot of other things, European and things called innovation loans, and something called the Small Business Research Initiative. And they're similar to grants, but different. The process is similar to apply for them, but they are quite different. If you're looking at suitability of innovation grants, you're probably going to want to understand what kind of level the innovation or the project needs to be suitable. If this is something called the Technology Readiness Level Scale, it's something that has been adopted by Innovate UK to help visualize this. So in the lower, so it's 1 to 9 score there. In the early stages, it's too academic really for Innovate UK or most funders. So that's when it's basic principles or early concept formulations. They won't get funded. That's not what they're looking to fund. They're looking to fund something that's been proven, that is it's kind of on that way to being commercialized. And so from proof of concept all the way up to prototyping in operational environments, that is a sort of level of projects that someone like Innovate would look to fund. Once you go beyond that, it turns into commercialization, which is slightly outside the remit of most innovation grants, although innovation loans are becoming more and more prevalent to help push those innovations beyond TRL7 all the way to making some money at the end of the day. So there's more information on the government website there. So I'd just love to cover off a few basics around the structure of this. So you can get up to 100% of your costs covered. Typically it's around up to 70%. What this is the idea is there to de-risk your project costs, de-risk innovation, encouraging companies to develop new forms of processes, services, products, enabling technologies, IP generation, and specifically, but not necessarily, collaborative innovation. So de-risking and trying to bring people together to create good commercial projects, innovative outputs. And these projects can be 6 months to 3 years. And in something like the SMART grant, the project cost range is 25k to 2 million. Various different grant opportunities exist. There's the SMART grant, which most of you might have heard of. It's the sort of flagship one from Innovate UK. It's an open call, and it's very competitive. Other ones are themed around various different aspects of government priority areas. So quickly, if you're going to look at the kind of projects that will be funded, they're going to be disruptive, game-changing products. They're going to sort of beyond idea stage, as I mentioned before, and they want to see that proof of concept is there and it's a commercial opportunity. You will have to match fund and cash flow a lot of these innovation grants, and so your funding, if it be 70% or whatever, is typically paid in arrears quarterly upon defrayal. So there is a large cash flow burden on a company there if they're going to go for innovation grants. So that's always worth bearing in mind. And usually the application process, it's looking at a full business plan for the project. It's a very in-depth document, often somewhere around 4,000 or 5,000 words, and it can take a long time to put these things together. So there is a time commitment to get something in, get it right. And I mean, if you're looking at Innovate UK, they like to focus around the Industrial Strategy Challenge Fund grand challenges. So that's AI and data, aging society, clean growth, and future of mobility. So this year there's been some COVID challenges that have come in part of that, sustainable economy as well, but it's always good to look at your innovation inside those frameworks and see if it fits, because you've got a much better chance of being funded. Or if it doesn't, maybe you can find a way to expand the scope of it to make it fit. And we do a lot of work with companies to look at how their projects, look at the possibility of funding and maybe trying to improve that chance. And you've got to prove things like return on investment to the taxpayer and clear route to market as well. But at the end of the day, they're looking for stuff that's going to be going to displace established markets, create new markets. That could be technical, pushing boundaries, what's possible, and also maybe commercial, so addressing a need in a new way. And that could be an existing technology. It doesn't have to be a new technology. But they're not for everyone. And remember that in the reality, grants seem like sometimes like it's free money, but that's probably the worst way you can come into thinking about these things, because it's a big timeline, a long timeline to maybe when you get your funding. There's a huge time commitment in the application process as well as running these grants, and the chance of success is quite low. So, and cash flowing can put a big burden on companies. So it's really something we work through with companies when we're having those initial discussions when they don't know what's possible and what's available. So I think at this point, I'm going to refer back to the chat and just see if there's anything in there which has come up. Okay, we've had a few comments. This is good. Match funding. How do we get around match funding? I don't know if there's a way to get around match funding. There are various finance options available to you to do that match fund. And that could be traditional or otherwise, or investment. It can look attractive to investors if you've got 70% costs covered, so the investor only has to cover 30%. But there's no real way to get around match funding, and you can't just put in sort of commitment in kind. That doesn't count. It's usually a cash commitment. I can go into that in more detail, but maybe we can save that to the end. My company turnover is too low, don't employ enough people. Okay. I mean, that possibly, is that to do with cash flowing the project again? So I'm not really sure. on that one. I can say they're open to all companies of all sizes. There is no restrictions there. It's more around the capability of the company to undertake and cash flow and run the grants. Management time of running projects is not to be underestimated. It's very true, Alistair. But yeah, so it's been transformed the business in so many ways. That's great to hear. But yes, the management time to run the programs is a very big commitment, especially with the reporting that some of the funders require. And what I do say to companies looking to go for grants is to actually write that in, make sure they write those costs in to the grant, because sometimes, or a lot of the time, people underestimate that. And then Rebecca's asked about finding the right pot and understanding the pitch process. Yeah, so themed calls and open calls it's something to be aware of. There's newsletters to sign up to from people like Innovate UK, the KTN. If you know about them, have just searched KTN. They have a number of sector-specific opportunity newsletters, and on their website there's a search function for finance and funding opportunities. They go beyond Innovate UK. There is something called the Innovation Funding Service from Innovate UK, which covers off all the available ones through those. But it's really about getting out there, finding people who can help you to find these opportunities, and working, just sort of trying to be aware, because sometimes they'll appear and disappear very quickly. Okay, thank you for those. I'm going to continue now. So if you still want to go for it, great. So we're going to go into a few more of the sort of realities on the application process now. So what does it look like, really? What does an application look like? Well, it's exam-style narrative questions, typically scored from a scoring matrix by 5 assessors. And you need to be scoring good or excellent to be funded. So the threshold set by people like Innovate UK is 70% mark. They won't fund anything less than that, but realistically, it's so competitive that you'll need to be scoring 80 plus. And if you want to be confident of success, 85% plus is the way to do it. And I think the exam style and the assessors is the thing to focus on here. You're looking to score points, and so you've got to basically dance to the tune that the grant funder is asking you to. You've got to answer the questions they're looking for you to answer. If you maybe have a great innovation, but if you don't answer the questions, you won't get funded. And similarly, it's about convincing the assessors. And these are only people. These are people who might have a bit of sectoral knowledge, but they're not experts in your area. They maybe don't understand the full impact of what you're discussing. And it's about making sure and ensuring that they do. And they might be seeing 5 or 6 a day during the assessment process. So you really have to grab their attention, make them sit up and pay notice. And that sort of feeds into what I'm going to go into now, which is sort of tips around the application process. So the first one is always time. Time is critical. It takes an inaudibly long time to get these applications to a point where they're fundable. Unless you're really good at this kind of thing, you're always going to spend longer than you think doing it. And also, if you're a collaborative project, I'd say time is even more critical to get the other partners signed off on their aspects that they need to sign off. So if you've got a big company as a partner on one of your collaborative project, sometimes they maybe have to go abroad to get sign off. I've done a grant application with Sharp UK, but they actually had to go back to Tokyo to get sign off for a grant application. And that took about 3 weeks to get that, just to get something signed off, because it had to go up the chain of command and back down again. So really, really pay attention to that. You may look at it and think, oh, I've got 2 months to apply for this. But I would always say, if you've 6 weeks or less is not enough to go through that whilst you're doing your day job as well. Always read the guidelines and the scope. This is something that comes up again and again. Make sure this opportunity is right for you, and make sure what you're putting in that project is within scope. Guidelines are really helpful. Don't fall foul of this. It can really trip up some really good applications when people just misread something, or they put something in which isn't right. So it's always check against that. Narrative. Now this is, I'm going to say these are all important because they are, but narrative is super important. as I said before, it's not a perfect process. You've got 5 assessors who don't necessarily know a lot about what you're talking about. So you need to excite them, help them understand it, get them engaged from the start. If you can get them to really understand the challenge and need that you're pushing, then sell them on the innovation and why it's the perfect innovation and it's so obvious. Why has nobody thought of this before? Why is nobody doing this already? Or this is amazing, this is going to change everything. That's the buy-in that you get. And if you can get that assessor buy-in on the narrative and the excitement, you're halfway there. And that's the first 2 questions typically on these applications, is the challenge and the need. Get that buy-in early. If you fail to do that, the battle's almost lost, I'd say. Keeping it simple. Don't overcomplicate it. Don't put too much details in. Don't go academic with the way that you write it or the way that you explain things. It's a commercial opportunity. Innovation grants for commercial opportunities. So you've got to explain it to a level which is enough to explain what you want to explain, but no more. Don't try and go into too much detail. It's something that a lot of people fall foul on, because they're techies, maybe. They're techies and they think that the most exciting part is the tech. At the end of the day, it's not. It's probably the commercial opportunities, how it's going to be judged on pretty much all of these grant opportunities. Ambiguity, don't leave anything up to the imagination. Tell them what they need to be told, and don't leave anything to chance. Make sure that they understand all the aspects, the key aspects that you're trying to get across. Like I said, they're not experts. Go into this kind of thing with confidence. Everyone loves a winner. So if you can be confident and convince someone that, you know, when you're writing about maybe your team and how good your team is, you know, if you go along the lines of, our team is the best because of this. We've got a number of people who've worked in this area for years. We're world leaders. What we're going to do is going to change and shake the very core of this industry. Things like that. It maybe sounds like it's going over the top, but confidence is key, and pushing that is what I do a lot of the time, to sort of just give that bit of extra spark and that extra glitter to an application when I'm helping companies. So it's, people sometimes don't realize how good they are, and they're being a bit shy. Don't. And yeah, keeping calm and checking and checking and checking. And that could be you checking it. It could be someone like my team checking it. And it could also be someone, you could get other people, people you know, friends, family, anyone, to just go over it and check it and check the guidelines, check against what you're writing, and just have more than one pair of eyes going over it. It's really important, and it adds a lot of value at the end of the application process. And as I said, it is an exam, so you've got to score points. You're looking to convince assessors and score these points, which it's a mindset which is, it takes a while to get your head around, and it maybe people have had the same experience or not, but I would say that virtually nobody gets funded first time because they don't fully get the process at that point. You maybe go into it in a bit of just, they don't really kind of get what they're supposed to be doing. They read the guidance, they read the scope, but they don't understand how to score the points as well as they could. So I'd say you're probably not going to win first time. Don't let that stop you, but also understand that it's an exam and you're trying to score points, and that could be that you've got to say certain words in certain places. You've got to read the guidance. You've got to answer the question that they're proposing to you. So small print is going to kill you. Make sure you read it. Scope, double check it, triple check it, and if in doubt, check with someone like myself and my team, or there's funders typically have helplines you can email or call. Feedback. This is a big crux of a lot of people's. Maybe you've gone through this process or not, but most people who've gone through innovation application grant writing process will have been pushed back at some point and have an unsuccessful application, and it will feel really personal. But I'd say that you've got to accept it. You can't think that well, it may be that the process isn't perfect, but take it on board that you haven't managed to convince people. It's not personal. You know, it may be that you've just you know, you could have caught the assessors on a bad day, but you didn't ensure that they were going to give you those points. You didn't ensure that you were going to be successful because there was something you might have done that wasn't quite right. So take on board what they're saying, accept it, and use it for next time. And it's quite hard for me sometimes to have those discussions with companies who've been pushed back and they really feel that it's against them and they're never going to get funded. But if I look at their applications, I can tell you 10 times out of 10 that they've just failed to do the right thing in the right place, or they've answered the wrong question, or they haven't done it right. And they will be really personally grateful to me to actually point that out to them a lot of the time and work through it so that they understand that. But it's a key thing that we do, is helping people understand where they failed. So at the end of the day, make sure you wow them. Appendices are key. There's a little space there to really kind of go above and beyond with what you can do in just narrative text, because you've got diagrams and such in. Clear and concise language, and the narrative flow. So it tell a story that's engaging, but really, really, really make sure you answer the question that they're asking you, not the question that you want to answer, the question they're asking you. I find it so often that people want to answer a different question because they want to tell people how good they are. If they're not asking that question, you're not going to get points for it. I'm sorry. So we're just about finished on the grant side of things, but I just thought I'd bring up this quote from Rod Smith from British Lithium. You may have seen them on BBC News this week. They've been on Click and the BBC News website. Basically, we helped them get £500,000 from Innovate UK recently to expand their operations and do what they're doing. And Rod said here that there's a bit of a quote here about how we just helped him get to that standard where it was fundable. And I think people like that, you don't have to be a big newsworthy company like British Lithium, but it's just, I think that's quite a topical thing. So that's the end of the grant side of things. We're now going to go on to finance. So when I talk about finance, like I said, this is sort of cash money, banks, lenders, other things like that. So what options are for you and your business? What are the best options? So I've split these into 3 different brackets. We've got equity, debt, and alternative. So there's a number of different aspects here. Please don't try and read them all. But we help companies for equity, so that's investment and stuff. We do a lot of help on preparing companies to pitch, training them, understanding what investors are looking at and the investment process, getting people right for that. There's something called Pitch Fest coming up, which if you are interested in equity finance, I would definitely keep your eye out on. On the debt side of things, we can do health checks. We do some general stuff around cash flow forecasts and looking at them and checking that they're right. And that can be for a debt finance application. It can also be for equity. And then there's we're starting to do more and more on the alternative finance. So I've termed that around reward-based crowdfunding, but there are other things there. But how I'm going to sort of talk today is around sort of life stages, personas of companies. So I'm going to put it in the context of companies who are pre-revenue. So that's haven't really started making any money yet, started trading, so have some turnover, or then maybe going into the growth stage. So pounds, so pennies, pounds, and then a bit more than that. So I'm going to do another quick poll now, sort of judge the room a little bit. If you could just put into it what life stage your company's at. Is it pre-revenue? Have you started trading? Are you growth? Or is none of the above really applicable? Okay. So hopefully we've had enough time now to do that. The results. Pre-revenue just wins out over growth. Fantastic. So there's not a lot of started trading there. So a lot of people have jumped from pre-revenue to growth stage. Yeah, I mean, that's kind of understandable. I think a lot of pre-revenue companies are going for finance. The finance options are very important to them, so they come to us. We get a lot of companies in that bracket. The started trading to growth is a bit of an ambiguous sort of area, but I think most companies who have started trading in the innovation sector and are, have turnover and stuff are probably in the growth phase right now. It's a lot of people at least think they are. Whether it's true or not, I don't know. I'm not trying to patronize anyone, I promise. So if we continue through now. So I'm going to start off in the timeline side of things, and we're going to start talking about pre-revenue companies. So pre-revenue company, there's a bit of a mix comes with pre-revenue companies who come through our door. It might be that maybe someone's recently had an exit, a couple £1 million exit from a company they had before, and they decide to start up again. So they may be that they've got existing backers or external investors, or even the ability to self-fund. If you've got that, fantastic. You've probably got cash to keep you going and build your company. But I'm not really here to talk about that today. I'm going to talk more about the other options available to companies in this sort of life stage persona. So typically you might be looking at something, crowdfunding is an option there. We can maybe discuss that at the end. I won't go into detail about that now. The 3 Fs, so this is something which is very common. 3 Fs are friends, families, and fools. People who will give you money to get your company going without potentially any return on that, just maybe sort of charity kind of way. There's a lot of companies are in that space, but what I'm going to talk about specifically is startup loans now. So that's something we can help companies with and understand what's available to them. So it's typically anywhere from £500 to 25k per director of a company, up to a maximum of 100k for that company. So if there's a number of directors or partners of that company, they can each apply separately up to a maximum of 100k for the company. So if your company's less than 2 years old, doesn't have a trading history, no assets to speak of, looking for something low risk and relatively affordable, then this could be the answer. It's a personal loan against the director, so that's something to be aware of. So they'll be liable for the repayments, and if you're going to look at it, you're probably going to have a credit check. It's something to be aware of, and business documents such as plans and cash flow forecasts. And quite a lot of the time, you're given by the lender a business advisor to help you during this time of startup. And that can be really valuable as well, because the banks want to ensure that you're going to get a successful company. They're going to get a return on their investment. So they're really good. Things to be aware of are just that credit check kind of thing, and make sure that you can afford any repayments or that liability. So once you've gone past that stage, and maybe you've started trading, you've got a trading history, you've got some turnover, orders, your forecasts, our projections are there. There's a number. Your options start to increase because it's less risk to these lenders. They can see that you're making money, so there's more chance that you'll be able to repay them. So the first couple of types of finance available for these kind of companies we're talking about in this sort of life stage: invoice and trade finance. Typically in the early days, invoice finance you can get for B2B companies. It will basically releases cash in unpaid invoices or accounts receivable as securities on this money. So you can quite quickly get some money into the company, which might be sitting in unpaid or unpaid invoices and such. It can be really quite quick. And as long as you've got a robust audit trail, they're reasonably accessible to most people. And then once you've if you're looking internationally as well, so exporting and importing, that can often put a high strain on cash flow. It can be quite expensive to do that, to do sort of international trading. So there's a certain type of finance called trade finance, which is available there, and it's very different because everyone's different. These international elements to people's companies are all different, so there's a lot of different options there. Typically, it's just termed under trade finance. So, as long as you've got a credit history and ability to repay, then these are pretty good options for you. There's more details there. I'm not going to go into the specifics now, but I just thought I'd cover that off and make sure you're aware of that. And then as you sort of continue down, there's something called asset finance, which if you've got a bit more of an established company, you might want to release some capital tied up in physical assets like machines, like stock, or sometimes intangibles like IP. So for innovative companies, that can be really quite a useful thing to do, is to release IP. You know, you've been creating lots of IP, and you need to cash flow, another aspect of actually using that IP to sort of grow the company, to create a product, to do something along those lines. Then asset finance can do that for you. So I mean, a bit of an example, we recently had a company come to us, and they needed £500,000 to increase their facilities, to double the size of their premises. And we worked with them to outline a proposal to brokers. We managed to secure better terms than they previously found, and it was all done relatively quickly. And they were really, really grateful for the support we've done. It's money, but it was cheaper money. So, you know, there's always options there. And I think asset finance is a good one for innovation companies if they've got something to put up on the table. And I mean, there's the more traditional and sort of standard types of cash money available in terms of overdrafts and bank loans. So maybe you've got short cycle working capital problems. Overdrafts are quite easily simple ways to solve that. But more long-term fixed loans are available for other longer-term costs as well. So sometimes the simple options are the best options, but there are a lot of different things available there, and it's worth discussing them with someone who knows. But key things to be aware of, that keep coming up as well when we talk with companies, is make sure that you're checking your credit rating constantly, regularly, and make sure you don't just take the first offer. So, you know, your lender, your bank, whoever might offer you something, but there's usually someone else out there who will also be wanting to offer to you as well. And lenders can be flexible, and if you get a better offer, they will sometimes look to undercut that. We've helped a company recently do that, and there was about 2 or 3 back and forths where the lender was undercutting each other. So be aware of that when it comes to the sort of the offers on the table. Yeah, then just check the small print, look at the costs, collaterals, things like that, and guarantees. Make sure it's right for you. Another quote. This is from someone we helped recently, and I think the last part of this is the best one. This is a company who's doing COVID safety devices called Spacebands, a Bristol-based company. And it was basically just having interaction with someone in our team who's had the experience of all these different types of finance to verify that they were making the right decision on the types of finance that was offered to them. And I think that's quite a lot of what we can do. So I'm going to move on to, we're still in a sort of started trading and maybe pushing onto the growth stage as well. Form of sort of, we'll talk about equity finance now. So if you've got a strong growth potential on top of what we're talking about previously, maybe equity finance is for you. Most of you will probably have heard about equity finance before, heard of companies raising lots of money, Dragon's Den, things like that. And it might sound really appealing from the outside, but anyone who's gone through it will know that it's probably the hardest type of finance to get and the most expensive type of finance. Investors are very hard group to please. You've got to do a lot of work to get the company to a point where it will be deemed investable. So it's a lot of work we do is helping companies explore that journey and understand how to be successful. So, you know, you typically start with an investor pitch, where a company has a few short minutes to pitch to an investor. You need to engage that investor. You need to get the tone, the content right. You need to be able to answer the questions that are proposed to you. We do a lot of work with companies to make sure that they understand that and get it right. And it's not a short piece of work either. It can take a lot of work and months or even longer to get a company to a point where they're investable, and investors will seriously look at them. Usually the first type of equity investors that you'll find are going to be angels. So early stage, they look for early stage companies with growth potential. Somewhere from about 15k to 1 million investment that they will put in. There's different ways, different groups of investors, angel investors or individual angel investors. Networks are available. But to be aware of tax relief is also available to those investors. So if you haven't already looked at that, there's a scheme called EIS or SEIS, which is there to support those investors from investments from angels. And if your company needs to register to be eligible for those. So that's something to be aware of if you're thinking of going down the angel investor route. And angels will sometimes will work with companies that they'll invest in to hopefully make them successful. Moving down to equity crowdfunding. So this can be good for companies, early stage companies who have a strong B2C offering, maybe a new product development they're looking to fund or a new market entry. They're looking at, usually companies who go for this, it's sort of 5k up to maybe 1 million. And it's for companies, it's companies who have a who want to fund new product development or market entry are probably the right ones there. It's a gate-kept process. A number of platforms are out there which can help you with this. They all have fees, and certain investor groups will focus on certain platforms. It's worth doing your research, making sure that's right for you. And there's quite a lot of help out there from those platforms. They want to make you a success, and they'll help you go through that process. And as you sort of get to further, more established, more profit making, or even near profit making, you maybe become interesting to people like venture capitalists. So if you've got turnover of 500k per annum, maybe looking to raise $750,000 plus, then VCs could be the right people to talk to you. Although be aware that they're typically looking for high returns on their investment. Maybe you're looking for a 3 to 5 year exit, and VC might help you propel you towards that. That could be the right option for you. But there are various caveats that VCs typically put onto these things. And finally, sort of growth capital. So that's again, it's around the 750k mark. Looking for companies aiming to expand their market share through sales and marketing. You can get quite a lot of money through growth capital there. So the key advice, really, as I've mentioned, is equity is really expensive. It's really hard to get. You maybe end up relinquishing control of your company because you're giving away shares in your company. But equally, there may be some clauses in these deals which mean that if you don't reach targets, that control will have to be relinquished to the investor. So it's important to understand that there's targets typically in these and consequences if they're not met. So read the small print, look at EIS, SEIS as well, and be prepared to relinquish control if that's what happens. So as we get to growth, this is more mature companies, scale up companies growing at 50% plus a year on year. You'll be possibly then making profits, or you're at that point where venture capitalists will become more interested in you. So there's a crossover there with what we were talking about before. But then you get into the realm of IPO and private equity, high net worth individuals. And at this point, you're probably going to want to engage with specific advisors, work with companies or advisors to make sure you're right, because you're talking about a lot of money at this point, piles and piles of money. So that's I'm not really going to cover off too much more on that, because it's kind of, when it becomes that size money, it's kind of almost beyond the support that we tend to offer, because it's too involved, and we just can't provide that much time to companies. Maybe you started trading. So this is a little bit of a step back into the life stage persona. Maybe you started trading. You've got growth potential, but your company or your offering has strong buy-in appeal to customers, or it's got strong ideals. You maybe are environmentally very strong business message. Maybe you're really got strong buy-in from techies. whatever. There's another type of finance, alternative finance available for you there called reward-based crowdfunding. This is legally different to a lot of the other types of finance. It's classed as sales, but you're basically you're selling ideas before they're produced. In most cases, it's a good way to test an idea, build brand awareness, and get customer advocacy. Kickstarter, Indiegogo, things like that are the ones you'll have heard of, and there's a lot of support out there. It's a specialist area. There's a lot of support out there for people doing that. It's something we've started to support a lot more companies with recently, but just be aware that it's legally different. It's sales, so it comes with its own caveats such as HMRC, tax and such. I quickly want to cover off now innovation loans. There's increased emphasis on these from Innovate UK. So we think there's going to be more and more of these coming out soon, and this is for late stage innovation projects closer to market. So if you remember that innovation TRL scale I showed you before, the higher end of that towards the business side and commercialization is where these loans are looking to fund. There's a bit of a blurb here, but basically it's a loan, so 100% of your project costs are eligible. It is repayable, but there's flexible drawdowns and such. They're more and more popular now, but you've got to be aware that the application process is quite in depth. The affordability for the company will be assessed separately from the innovation that is proposed. So there's two applications to go into this, which does require a lot of time to get right. Two of them are out there. Here, I've put the links in here. You maybe want to have a look at them, or just type in innovation loans, Innovate UK into your Google, and you'll get the two that are out there at the moment. But they're good options for some companies, I'd say. So if you're planning to commercialize, then that could be right for you. And last thing is just quickly mention the business finance there to help you explore the different types of finance available. You'll come to a landing page that looks similar to this. You can click through and explore what the options are, read through yourself. You can connect directly with providers, or you can contact someone to discuss your options. It's set up as a low interaction, low uptake from us. So there's a lot of information there for each type of finance. As you click through, you get more and more information on each one, top tips, different things. Is it right for you? And you can connect with investors and other people as well. So that's a standalone thing that I wanted to mention. Please have a look at it if you want to know more. In the first instance, I'll put the link in the bottom there, and I'm gonna leave it. That's sort of the end of it. So please feel free to get in touch. If you take a picture of the QR there, you'll find my LinkedIn. Equally, email ENSW, so it's Enterprise Europe Network Southwest at businesswest.co.uk to come through to our team. There's the websites there, and that's me with my pre-lockdown haircut. I need a new haircut. It's not the same shirt, although it might look similar. So I think that's about it. I don't know if we've got any questions. Tara, have we?
Yeah, there's quite a lot of questions which I was anticipating.
I'm just gonna have
have a bit of a breather there. Okay, one question that came in quite early when you kind of did the interaction on the chat was, can you apply for more than one grant?
Yes. Oh yes, definitely. So you can apply to as many grants as you want, as long as you can. They want to ensure that you can afford your part of that. That could be the time element, capacity-wise, internal capacity, or the match fund element. So you won't necessarily have to reference against that in an application, but please be aware of it when writing grant applications. You can apply for as many as you want. There's no limitations there, but you need to be able to exploit those if you are successful. And if you can't afford the match fund, then it might be time wasted that you win your application, but then you have to turn down the grant.
Okay. And there was one question or comment that came in the chat from Rebecca Hill. She was successful getting a UFI VocTech grant, I think I've pronounced that right, last year to develop a prototype digital learning program, but she needs help to find the right accelerator funding and not sure where to look. I guess that would be contact us, Rebecca, and
Please
we
do,
can have a
yeah.
conversation. Yeah. So
Yeah.
contact us on the EN. Everybody will get a follow-up email from this webinar. So do feel free. It's probably a bit more of a one-to-one, but I just wanted to acknowledge that response. Tim Chater's asked in the Q&A section, ref grant funding, what are the chances percentage-wise of success?
Hi, Tim. So yeah, the chances of success vary. At the moment, there's a lot of companies going for grant funding because finance, cash is short on the ground. It's COVID times. Everyone's a little bit short on cash, so there's a lot of people looking for different options. So there's a lot of people applying to grants. I would say for something like a SMART grant, the official statistics are there's around a 6% success rate, but there is caveats to that. So the caveats being that is everyone who's applied. It's people who get kicked out because they click the wrong button on the eligibility. They get made ineligible because they click the wrong button on the application process. And there's quite a lot of companies fall down during that. It's really, really gutting when you see it. Companies might have worked for months on an application, but if they click the wrong box at the wrong, during the application process and nobody checks that, the computer will kick them out within about an hour of the deadline closing. It's a computer says no situation that you can't get around it. And there's no way to appeal these things. If you make yourself ineligible, then you are ineligible and you can't come back. So taking those out, I'd say for something like the SMART, you probably around 10%, but companies who come and ask for help, people who interact with our support, we think we've probably got a lot better than that, somewhere above 40% success rate. But that's not official. Please don't quote me on it. But that's some sort of internal metrics within our team off the cuff.
Okay. I'm going to struggle pronouncing.
Sorry, Tara.
Oh, yeah.
One more thing. You get a better chance of success if you apply to a themed call, I'd say, rather than an open call. So with the open calls, like the SMART grant, you're basically applying against people who are solving cancer and doing space stuff, and everything you can think of is going in there. So you're often better if you can find a themed call around what you're applying your innovation area. So try and find out what's available for your sector and for your specific project.
Brilliant. A question here, I'm going to try and pronounce the name correctly. Selamowitz has asked, how does one access trade finance? He's scaling and importing a couple of containers, but doesn't have the finance.
Okay. So what I would suggest is that you contact us and we can go through that with you. I think we've got Ruth on the call, actually, who's from one of the pictures you saw at the start. She's our expert in that. I haven't actually seen the list if she is here or not, but maybe she could come on and say a couple of words about that. Ruth, are you there? Maybe she's not. She did tell me she was coming on.
She was on.
Okay. Okay, so maybe.
Hello.
Oh, I see her.
There you go. There you go.
Yes. Hello. Good morning. Hi. Sorry, I can't actually see anybody, but oh yes, my video's come up now. Yes, sure. I'd be happy to talk to the inquirer about trade finance. So,
is there anything you can just quickly say about it, just so everyone?
Yes, sure.
Is it not possible to do that?
No, that's fine. With trade finance, you need to be bringing in containers for confirmed orders. So if you're bringing them in just speculatively to sell randomly, then that won't work. You do need to have confirmed orders. So if you've got confirmed orders from a reasonably well-rated buyer, then the trade financier will fund the transaction all the way through. So they will pay the seller for you, the overseas seller, and they will take control of the goods. That is their security. Then when the goods dock and go through customs, again, the goods, the financier has a lien on those goods. So they are still the possession of the lender. They will go to your buyer and your buyers, and you'll invoice your buyers, and then that invoice will be discounted by the trade financier. The proceeds from the discount will go to pay back the trade finance, and then you'll get an advance of cash and the rest of the cash once your buyer pays. So it's a combination of import finance and invoice finance.
Brilliant.
Does that help? I'm very
No, that's brilliant. That's absolutely
brilliant,
Ruth. Thank you for that.
Okay, we've got quite a few other questions coming in. Always knew this one would generate quite a lot of questions. And we've got about 5 minutes left, so we want to kind of keep it moving. Okay. With the loans, what are the typical interest rates? And I'd assume Tim Jarvis is pointing at the innovation loans, because that came in quite late.
Yes, so all that information is available on the innovation loans. If you search for it, you'll find it on the Innovation Funding Service or on the innovateuk.gov website. I'd say go there, but I think it's less than 7% total. It's very flexible. Have a look at those documents. It is all there. If you need more help, then come back to us and we can help you with that.
Neil Charman, yes, the slides will be available. We will send you a link in the follow-up email with a copy of the recording. So you will get that. Andrew Mercer has asked, do smart grants have a better chance of success if they meet one of the UK industrial? Yeah.
So I did mention this earlier, but yes, I'd say that they do have a better chance of success, because there is a question on there about wider benefits and about basically there's a number of ways you can reference the Industry Strategy Challenge Fund areas, and that's all seen as really positive by the assessors. It will get you points, specifically the question around wider benefits. But yes, and meeting government targets, return on investment, value for money, they all pay into those questions. So definitely.
Brilliant. Okay, so now we kind of ended the Q&A session. We'd like to get your feedback. So I'm kind of hoping Marcus will, there we go, we're flicking over. So we've been using Slido over the last couple of webinars to get some interactive live feedback. You can use this two ways. Point your phone at the QR code, a little option to go to a website address will come up, and there's 3 questions. So first of all, we'd like to know, what did you find most beneficial about the webinar? The other way is go open a new browser, tap in slido.com and the code at the bottom, and that will also enable you to tap in your answers. Oh, here we go. It's quite nice because you can all see them live as they kind of go up, which is really useful. There we go. And then if we go on to the next question, it's be a sliding scale. So it's just, how would you rate communications in the format of this webinar? Yeah, we always like that one. Number 5 jumping up first.
That's Marcus doing that, isn't it? And Ruth.
And then the final one, which is probably the most intriguing question for us, especially as we've got our last webinar in this series next week, is what topics would you like to see us cover in the future?